Hello, warriors, and you have to be one to be in this business. And I'm Dale Pinkert from TradeGATEHub.com, sponsored by TradeView Markets. Check them out. You can trade every instrument in your imagination with TradeView, with very competitive spreads. In fact, some of the tightest in the industry. So here's what everyone's talking about, guys. Monthly breakout in the dollar index happened around, off the high that we had in 2016, and this was the COVID high in 2020, and it took it out. It was at 99. So a lot of people paying attention to this monthly breakout, they're starting to talk things like 107, 110, which if you believe in the formation here, call it 90 to, 102 is 12, you could get 110, 112, but I want to just say something that may make this video go viral. All right, if you could go through videos across the FinTwit industry, and many people choke on these words, and the words are, I was wrong, okay? Or they choke on the words, I don't know. Okay, so starting off with the dollar index, I was wrong. I thought we were going to have a fib retracement. I didn't expect the COVID high to be taken out. At the same time, I don't recommend chasing a market where the DSI is in single digits at 7 on the euro and 95, 98 on the Dixie. And if we start trading back under 102.70, this is a monthly candle. It will not be a breakout. I can't argue with the price, and I've probed and protected and have been stopped out. I could say I was early, but why not just say it the way it is? Okay, if you have a hard time accepting being wrong, then you're going to be bankrupt. So it's okay to be wrong. You just don't stay wrong. And you could probe a market again and again. And in fact, I'm trying it again here based off this 15-minute pattern. That's something else I want to talk about, is that sometimes if you don't see anything with your telescope, you could use your microscope. So I did a little earlier. I thought we were going to have some type of divergence, but I just cannot buy the dollar up here. I think that even if we are having some type of, the milkshake theory where the dollar goes up just because of debt, emerging economies, debt is denominated in dollars, and this is going to make it even more difficult for them to service the debt as the dollar appreciates. So the dollar, I did not correctly, the euro and the Dixie, I did not correctly forecast or trade. And right now it's an I don't know, and I'm going to 15 minutes for a scalp. This was something that I was right about, and that's why I am kind of surprised that of this weakness in euro, but it was really made because of weakness in pound. And that was at, here's the euro pound. All right. The last low we made last week in the euro pound put in a higher low. And I'm looking to buy it here around 83.5. This I was right about. I was right about it here, right about it here. So you're going to be wrong and you're going to be right. And I'm just saying that if people don't say they're wrong when you're following them, they're revisionists. Okay. And, I learn and teach. I'm still learning. I'm still growing. No one walks on water. But there are times you could also be right. So, I was real right last week shorting gold up here at this candle, and we are threatening this breakdown. I don't like chasing anything here. I'm still holding a piece of a position looking for a breakdown. I still think this 1830, 1840 level is possible in the gold. Also, we have a pretty important central bank event that's going to happen this week. The BOJ is going to meet, I believe it's Thursday evening. I look at this chart here, say, for example, on the 2-hour chart or the 4, and I think that people have been following me for a while would think what when they look at this RSI pattern? Anyone in the room? What does this RSI pattern imply? The real simple implicator when both price and momentum confirm. Anyone know? Post it in the room. That's correct. Yeah. Very good, Lewis. So a higher high, a new high confirmed by momentum means that it is not most likely the high, but only a high. So what I'm looking for, and the narrative that I'd be looking to trade would be BOJ doesn't do anything that supports the yen, and we end up with one more push up to clean out stops. I'd look to fade USD JPY strength after the BOJ if the opportunity is there. Okay, so silver, again, you know, broke down under 24. It's attempted 24. Although it's stronger than gold today, it's still weaker. The XAU gold silver ratio is trying to pull back. Maybe this is a top, but we did get this big move, which made silver underperform. Today, it's trying to correct. Copper, which I've been bearish for a long time, it's barely holding on to its 200-day moving average. Sell rips. This is something else I was right about. Here's the S&Ps. I showed this daily wedge line. We were there for this move on the breakout of the wedge. And then Mike and I were on last week, and I said, I'm not bullish, I'm not bearish, I'm agnostic, I'm trading it. And the 4,500 level was definitely laid out. And I said there was a chance sometimes we come back and tag these wedge lines, and that's what's happening right here. The wedge line right here. Will it hold? I'm leaning more towards any rally, maybe some short covering into the Fed will not hold. I do believe that we're going to take out this low in S&Ps, just like we did in NASDAQ, took out the low before we turned. I was talking about the semiconductors. Look at how it's holding the line here. I said I think they're good for a trade, and was patient waiting for this. I think you could go with SMH with stops under the low of the day. Like I said, if we get short covering into the Fed, and what an interesting time to have the Fed with the S&Ps hanging on a major potential breakdown at this 4,200 level. Let's see how hawkish the Fed is now. Here's the long-term chart. So if we start taking out 4,100, that actually puts us back inside a major megaphone formation. Remember when people were talking about the megaphone for a few years? So that's where, you know, you have these lines coming off. There you go. There's the megaphone. So, you know, people were talking about this pattern, and then we just blew through it. We pulled back to it. You know, this would be a pretty bearish event if we broke down under this 4,100 support and re-entered the megaphone formation. I know it would sound extreme, but that could give us another 10-15% from here down to about 34.40. And what's interesting about 34.40 is that that's the high that we had pre-COVID, right? So that was a high 33.97, 3400. I think that this could end up being a magnet, and this is where I think we're going. I do think that, you know, SMH is, you know, a trade, but longer term, we're on the verge of what could be even a crash type of scenario back inside the megaphone. So be careful. I think, you know, sentiment here is also very negative. So don't just sell it anywhere. Maybe get a rally back to 43, 4,400 from here. But the action daily, even though we're rallying today, we could rally for a few days and then take out this 4,100 level. And I think 3,400 is a realistic picture, probably into the summer. In fact, when you think about being long anything besides the dollar, what's really working? So we have some deflationary markets happening here. And I think the only thing that's going to turn the market is going to be a turn in the dollar. So if you're looking for 110 in the Dixie, I don't think 3,400 is unrealistic. I think it's going to take a turn in the dollar to avoid what's happening in emerging markets that could end up leading towards a crash. I think this market is very vulnerable here. There are a couple of things that I'm interested in buying just based on the technical point they're at, but it doesn't mean that it's going to be a long-term trade. And I think that the S&P showed its hand from last Wednesday. What a move from last Wednesday when Mike and I were on warning people about this resistance. Mike said he wasn't adding. I said, Mike, I think we could tag this wedge line. And that's what happened yesterday. There was no way I could forecast that we were going to bounce today, but I actually think any kind of bounce back up towards 42, 4,300, max 3.5, these lows would be a selling opportunity. So it'll be a rip. And because I don't think the Fed could back off and say, okay, we're just going to watch it now. Because the market has done tremendous work for them. I mean, there's been tremendous amounts of wealth destroyed in the bond market and starting to disappear in the equity market. In fact, when Mike and I were on last Wednesday, was when Facebook came out with their earnings for the second time and got killed, right? And when Mike and I were on, I said, Mike, I said the last time the first time we gapped down to Netflix, that was the beginning of the breakdown in the S&Ps. And could this signal another break in the S&Ps? And it did. So I also want to cover what's happening in WTI because so far that's held support. We've had another bounce, but I just want to take you through what's happening here. So, we got some bullish news. Russia cut off oil supplies to Poland, and I think some other countries are affected. But look at this, how strength continues to, this is the same level. This was a very nice rally off major support. This rally was okay, right? But much weaker, did not have the same strength or momentum that this bounce did. And this bounce to me is feeble. If we're failing here, I think it could be short with stops over 104. Because if we take out 94, I think 82's in on deck and lower. So this also would be contribute to an acceleration down and a breakdown in the S&Ps because the oils have been one of the strongest groups. They were one of the only groups up yesterday. So if the oils, I know they're not as big of a percentage of the market, but until this China lockdown stops, you do have pretty good demand destruction. And the oil looks vulnerable to me, just looking at the nature of the rally. Strong, not as strong, feeble. 10-year, I've been talking about that there could be some type of bottom developing in the bond market. I don't think it's yet because of this. If you go with the real simple implicator, some people call the relative strength index, and you believe that markets rarely bottom when highs are confirmed or lows are confirmed. Well, the TLT did confirm this. So I think next week's a real critical week for the market, real critical week for the financial markets, especially in equities and bonds, leading into the Fed. I do see an opportunity for one more high in US dollar yen that I would like to short. I just wanted to, by example, lead. And leading is being authentic, not with just the public, but with yourself. Otherwise, you're not going to grow as a trader. So I'm not going to sugarcoat it. I was wrong on the dollar. I've been right on other things. I was wrong about the huge move we had in yields. I thought we were topping, the yields were peaking a lot sooner. The yields really don't look like they may make a new high. It's still possible we have these confirmed highs, but I think a lot's going to come down to the Fed, and I'm thinking that it's a sell the Fed, sell into the Fed, and then buy whatever the Fed does. That will put in some kind of lows, but it could be from sharply lower, or that'll drive it sharply lower. So some very important inflection points for those of you that are, wear tinfoil hats, and you could tune it out if you want, but there is a solar eclipse. Last time we had one, we did have a big sell-off and then an important low, and we have one on Saturday, which kind of puts it at, I've seen major turning points on these eclipses. So I'm doing this broadcast from my pyramid, but pay attention to it. Just just like we paid attention to the change of seasons and the potential of markets changing directions, because everything's a cycle. So that's my wrap for today. Tomorrow's my interview, and actually I'm going to be interviewing a guy who had to reschedule with me. And I know everyone's getting rich in their real estate, but Tom Basso had a place, has a couple residencies, and he told me, Dale, someone offered me so much money, an insane amount, for my townhouse in Scottsdale. I had to take it because I know 12, 16 months down the line, it's going to be a much different real estate market than it is today. So, I'm going to ask Tom about that. That's a big life change to make on a market call. I've done it and I've been wrong. I've been wrong on those sales at times. So you know what? Don't take this too seriously. When it comes to, your trading, it's not life or death. You're going to be wrong. You're going to be right. It's all about your risk management. And I do see some real nice opportunities setting up. Dixie's starting to come off here. So let's see what the whole crowd's jumping on the long side of the dollar now. Let's see what kind of reversal we get today. And Mike will be with you in about an hour and 14 minutes. Mike and I talked about some semis that look like they're performing a little bit. And the cannabis space, well, I'll leave you with the cannabis space. So I was talking about that we were going to make one more low in Aurora, and we're getting this little turn here. Look at the divergence in Aurora. Tilray, same thing, making a new low. These cannabis stocks have had so much air taken out of the tire that I think that they could hold up. So in case we're not going to have a meltdown, there are a couple of things that you could, like Mike says, there's always somewhere to hide. And maybe cannabis is going to be one of those spaces. Although in a bad market, you could own the best stock and it won't matter. So anyway, tread carefully. If you don't know, that's okay. The picture will clear up, and there's plenty of trading opportunities. You're going to miss trades every day. Don't let these things get to you psychologically or emotionally, or it's not worth doing this, because it will affect your health. So as much as you can learn to be detached, I know it's much easier said than done, the better. And the best way to become detached, if you feel too, I don't know, you're watching every tick like it's life or death, is to reduce your trade size. And you'll see you'll start to trade better, because you're going to not be as, concerned about, you won't start watching 5-minute charts. Reduce your leverage, use less leverage. There's nothing wrong with 2-to-1 leverage. In fact, I know some of, guys that are very wealthy, that trade FX, and they don't even use leverage. They have $1 million accounts, and, maybe they'll they'll just pay cash for the currency they're in. They just switch to another currency, and you get a 5 to 10% move in currencies over a quarter. That's pretty good money. So you don't have to go 10 to 1, 20 to 1. Definitely don't go above 10 to 1. So everyone have a good day trading. I watch for the BOJ tomorrow for a shot there. And even if you're bullish a dollar, guys, don't chase this market. Don't chase anything. Let it come to you. If you're bullish a dollar, maybe you're going to have a chance to buy it here at 101.50 or par 50 in the course of the next week. So a day at a time, do the right thing today, and tomorrow takes care of itself. Hope that you guys are enjoying what we're presenting here on TradeGATEHub. These miners, I think, are going to set up tremendous buying opportunities, especially if there's a washout and we go to 3,400 or so and gold stocks fall, prey to this. So, you look at GDX. I don't know if we're going to new lows. I would start looking at these at 61.8 back, 78.6 back. Newmont, I don't think it's going back to 52, but I'd be looking to probe that here around 62. And, even some of the juniors have held up quite well. Look at, Yamana. Okay, Yamana looks really good. I mean, so we had a low of 360, high of 630, 270. Start doing your fib work, and perhaps sometime late June, early July, you're going to have great entries on the miners. But you're going to have to be patient to wait for it and not get FOMO. But this is one I'm looking for. Talked about most commodity markets selling off into the July timeframe, late June, looking at being a pretty good summer to accumulate precious metals. So stick around. That's a wrap for me. Come and join us in TradeGATEHub. Open a demo account at TradeView and see if I'm telling you the truth about anything you want to trade. So good hunting, everyone. Don't chase markets, let them come to you. Do this exercise tonight so you can get used to saying it. I was wrong and I don't know. And they're both okay. It's part of the business. Don't just count your pips, count your blessings, everyone. Take this video viral because you heard wrong at least 50 times in a 21-minute period. Okay? Adios.